Hello and welcome to Investors Hangout, your weekly guide to making smarter financial decisions. This series is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Today we are exploring if Indian investors should have international funds in their portfolios. And to discuss that, we are joined by our in-house expert, Dhirendra Kumar, who will help us understand the rationale behind it, the benefits of investing in global markets, and the considerations that you should be keeping in mind. So welcome, Dhirendra.
Thank you.
So, first up, investing abroad has picked up pace in the past few years. Why do you think one should have international exposure in their portfolio, and is it really important?
One, it is important, but why it has picked up of late? Simply because mutual funds have gained popularity and many mutual funds launched international funds.
Yeah.
Or they launched a fund which also said that we will also be investing a part of your money abroad. So that led to awareness that, okay, it is possible to invest abroad without actually going or getting into the mess of, or going through the hassle of, exploring how to go about investing. It became easy through a mutual fund. Why? Because there is a different story altogether. Everybody should consider investing and carefully, thoughtfully, and with the understanding that this is your long-term equity money which you are investing. Why international? Because look at the size of the global equity market. That is $125 trillion. $125 trillion, you'll have to count many, many zeros. But more importantly, $125 trillion is the size of the investments or the market cap of all the stocks across the world. And India is only $4 trillion. So imagine, of the big pie or the big universe that is available for you to invest, we invest only in 4%. And it is not that, when investing in equity, we should be thinking in terms of investing in the finest equity. The stocks which are cheap, the stocks which are high quality, and the stocks which are available right now, and that universe is pretty large. And we are limited to only the Indian component of it. So that is why we should consider it. Besides that, there are, the universe of investment available also has varied component, great innovation, great technology, or great strengths, or great commodity. Different markets have different flavor. And there are different things which are strong in different geographies, even economy-wise. So look for the best option, and that's why you should invest abroad.
What are the different ways that one can explore to invest abroad?
Same as domestic investors, you can invest in a company directly. You have the time, you have the inclination, and you have the interest in understanding a company, you can buy. International stocks, investing directly. You have the actively managed funds, and then you have the ETFs or the index funds where you can invest and you can gain exposure quickly to an index. Now, investing abroad directly is a little cumbersome in a sense that you have to open a brokerage account with a broker who will give you access to different markets. And there are good brokers available. You have to do a couple of things beforehand. One is to open that brokerage account. Move your money from your domestic account to that brokerage account and convert that rupee into dollar. Take your investment decision of what to invest and when to invest. Sometimes when to sell as well after you have invested. So you have to do all these things yourself. Second thing is that you can invest that money, move that money to a broker and invest in a mutual fund. So you don't have to buy and sell. You just choose a good fund and you invest. Or you invest in an ETF through a broker. All these things amounts to, moving your money in rupee to dollar in the brokerage account and then file your income tax return with all these conversions and what you have invested and the additional reporting. And it is possible for Indian investors to invest $250,000 equivalent dollars, $250,000 worth every year. Every citizen is entitled to. Of course, you should have the money. But more importantly, this is the enablement by RBI for every citizen. Now, there is another way. There are domestic funds funds available in the domestic market which invest abroad. You entrust your money to that fund manager and he is investing in the markets abroad. You invest in rupee and you don't have to convert that money. So that makes it easier. That makes it very convenient. And the tax laws are also very streamlined. It is almost like, treating it like a debt fund. And that makes it, very favorable. And the additional thing is that, you are able to, all Indian funds are regulated by SEBI. It has all the regulatory, oversight and the valuation norms or the reporting norms or the NAV to be disclosed by what time, and the transaction, the cutoff time. So we are, it's the same friendly mutual fund available, which is investing abroad.
And ETFs?
ETFs too. There are quite a few ETFs now available to domestic investor, and they are available even now. The only problem is that many of these ETFs, because RBI has put a restriction on these funds investing now, because there was a ceiling of $7 billion and that has been exhausted. There was another ceiling of additional $1 billion for ETF that has also been exhausted for most funds. So all the NASDAQ and FANG Plus and S&P 500 ETF that were available, the investors are buying and selling among themselves. But if the fund company wants to buy more, if there is a greater demand, they are unable to invest abroad. So the problem is that most of these ETFs are trading at a premium, and that is not a wise thing to do. If something is worth 100 rupees, you can't spend 120 rupees or 115 rupees to buy that. Simply because the demand is more and the supply is zero. So the prices have gone up. Go to Value Research online, look at the fund section, and at the bottom you will get all the category listing. Click on international fund, and you will get a listing of all the funds, including the ones which are open for subscription. So you get a curated list. Look at your options.
So, what happens is when one talks about international funds, what strikes most investors is the funds in the US. But are there any other markets that one should explore? Maybe China or perhaps emerging markets or other domestic?
Plenty. You have a Europe fund. You have the ASEAN fund or, Global Innovation Fund. There are thematic funds, there are trendy funds, there are geographic, specific geography. There is a Brazil fund. And they have a good history. Besides that, there are actively managed. When we think of US fund, we think of NASDAQ 100, S&P 500, FANG Plus. But we don't think of, actively managed US equity fund. They are also, a very large force. And there's a big fund. There's a large fund which is available and still open for subscription, which is a mix of value and growth strategy and decent long-term performance. So I would say that, investors should explore. There is a reason why US is, considered as international investing for Indian investors means investing in a US fund. Simply because we can relate to those companies. And they have been a very high-performing, investments as well.
And they form a sizable chunk also of the overall.
Chunk of the overall market simply because, US market is way too big.
Yeah. Okay. So are there any risks attached to investing abroad or things that one should be mindful of?
If you are investing through mutual funds, there isn't an additional risk except for the usual risk of, currency fluctuation. But that is a fluctuation. That is not something. And on the balance, I think most Indian investors will actually benefit from it. Think of it like this. You invest 100 rupee into a US denominated or in an international fund. And that money gets translated into dollar and that gets invested. Assuming that money remains constant and you take it back after 5 years, no return, zero return in that market. But the rupee has depreciated by then. You bought it, you took that money out when it was 80. 5 years later, when you take it back, you are getting 100 rupees. So you have got a 20% gain or 25% gain on your 80 without the market doing anything else. So rupee depreciation over a longer period of time translates into or enhances your return. But in the short run, it could be very volatile. Sometimes it goes up, sometimes it goes down, and sometimes it can, rupee can appreciate as well once in a while. And that can cause some anxiety. But medium term, long term, I think the basic premise for investing abroad is, this is added charm. That if interest rates are lower elsewhere and it is marginally higher in India, then the direction of the currency will be that it will depreciate. And that is the assumption based on which, investing abroad there is an added, attractiveness or the added charm of investing abroad.
Okay, so is there a segment of investors which you think should not be investing abroad at all?
Most investors should invest abroad. The only problem is that if you have to really go, today, because you don't have this whole gamut which is available or accessible. So you should not get into the venturesome part. Don't go to a stockbroker and open an account unless you have a reasonable scale. It may not be worthwhile. You may also not understand the tax complications and other things, the reporting obligation that you might have, and you may not be well prepared for it. So it will just add a lot of headache without the commensurate benefits if you are going to invest 5 lakh rupee, 10 lakh rupee. As and when it becomes possible, choose your mutual fund. Keep a simple strategy. Understand what the fund is. But that is to say that, you should be investing with a long-term orientation. If you invest for a couple of years in a domestic fund, that is exactly the reason why you should be investing abroad. So if you're thinking that, a short-term investment and benefit from that, don't do that.
All right, so to summarize, invest in equity, invest for the long term, and make sure that you also invest abroad. Now, moving on to the viewer's question. So, Vinod has written in and he says that I've been doing SIP only in Indian mutual funds for the past 10 years and I'll continue to do so. His question is, will the dollar continue to appreciate against the Indian rupee for the next 15 years? Or considering India's economic growth story, will the rupee stay strong and appreciate? Considering both views, should I be invested in a US-based mutual fund? I have a 5-year-old son and want to be prepared for his higher studies abroad if needed.
I'll answer his second question first. That you need to have enough money so that you can sponsor your child's education. Now, will currency keep depreciating? That is what I have seen in the last 45 years. Till we have this, interest rate differential and a trade deficit, this is likely to prevail. But I don't know for how long, because suddenly we are looking at a world where, the de-dollarization of the world is beginning. There's a greater distrust in, having dollar-denominated assets, particularly after Ukraine. Now we are witnessing, a trade policy which is creating havoc across, global trade. Then we are also witnessing a situation where dollar denomination of the global trade was preceded by the gold-denominated or the underlying gold reserves. And today we are witnessing a reversal of that. Most central banks are holding gold as a currency. So emergence of gold as a currency, the emergence of trade restrictions and other things which is creating. So I don't know what is in store. The future is always uncertain. And today it looks even more uncertain. But going by what we have witnessed, if we have a trade deficit vis-a-vis US and, we are, the interest rate differential prevails, then I am hopeful that, this rupee depreciation might continue. But it's very important for you to reduce your risk, optimize your return. And for that, you have to invest abroad as well as in India, not necessarily a US fund. But, the US market has another dimension to it, which is that when we invest in a NASDAQ 100, you are basically riding the technology play in the world. If you are thinking that, great technology will originate from US and they will be turn into a business model, and that will most of those businesses are global businesses. That is the logic, and I think those are kind of investment opportunity which is not available anywhere else. So that is another story. That is why, and that has very little to do with the US market. US market might be a sizable market for those companies, but most of those businesses, they have their customers spread all over the world and quite evenly.
All right. Well, thank you, Dhirendra.
Thank you.
We'll see you next week with more insights on how to grow your wealth the right way. Till then, stay happy, stay invested.